Okay, we are live. I'm with Chris Alaimo and Ben Gassaway. They are the host at the Amateur Investors Podcast. Guys, thanks for jumping on.
Thanks for having us.
Yeah, thank you, Chris.
Yeah, just doing a couple checks here. So we're live on 4 different platforms. Going to try to keep up with chat as usual, trying to take as many questions as possible. So hope you guys are ready for a little Q&A.
Sounds good.
Kind of the macro standpoint we're looking at today is Bitcoin is absorbing traditional financial markets. So if you have a question or comment and you're on YouTube, LinkedIn, Twitter, Twitch, and you want to jump in, feel free to do that in chat. When you do so, we can pull those up at any time. So we want to be as engaging as possible with everybody. So thanks for being here. If you're joining in, let us know where you're coming from. Type into chat where you're at. I'm outside of Louisville, Kentucky. Chris, where are you at?
I'm at Bridgewater, New Jersey.
Very cool. Ben?
Delran, New Jersey, close to Cherry Hill.
Very cool. Awesome. So just for context, can you guys just give a little bit about your backgrounds for a couple minutes? And we'll kind of take it from there. We'll start with Chris and then Ben will have you jump in.
Yeah. So I'm a chemical engineer by degree, I guess, or trade. Graduated from Rowan University. It's in South Jersey in 2015. Kind of been doing more of the chemical engineering route or engineering route the last 6 years of work. Ultimately, when the pandemic shut down, I was looking to use my time in other means. And so back in November of last year, Ben and I started the Amateur Investors. So we started as a podcast. We've expanded to a website, and just kind of helping people with financial education. And we see Bitcoin as a very important part of that, just because we kind of see the old financial markets breaking down. And we can talk about that later in this.
Good.
Cool. I studied engineering at Cornell. I graduated 2018. And similar to Chris, I really started out with a passion for really capital markets, public markets, equities. But Bitcoin has sort of, I guess, taken over my mindset, and I'm starting to think Bitcoin. So a lot of my sort of financial analysis has been shaped by the thought process around Bitcoin, but I continue to dabble in, equities and traditional value investing as well. So but Bitcoin is just a bigger part of it than I ever expected it would be. So excited to be here. Thanks, Chris.
Yeah, absolutely. So let's go kind of big picture. You already mentioned talking about how Bitcoin is absorbing, if Michael Saylor says energy from the traditional financial markets. How do you guys have been around for a couple years around it. Ben, I think since 2016, Chris more so 2020. Obviously, I talk about the progression a lot with Bitcoin, and typically it's in 3 steps. So 1 is speculation stage. 2 is, you're like, oh, wow, this is an interesting portfolio allocation asset. And then it becomes unit of account.
Yeah.
So as you go through those 3 steps, kind of talk about, how do you look at Bitcoin, big picture, and then how has your viewpoint changed over the years? We'll start with Chris.
Yeah. So I guess I'll take the history of my class. So like Chris was saying, I'm class of 2020 for Bitcoin. I guess 2017, I was always kind of into investing right after graduating college. My dad always was preaching to me, growing up, oh, you got to invest in the market. You got to, it's growth over time, your money invested over time. And I'm like, yeah, Dad. He's like, you should really take 10% of your money as working as a lifeguard or whatever your small end jobs. And, it's kind of like, but Dad, I want to go hang out with my friends. I want to go to the movies. I want to spend things. But once you really graduate college or, graduate high school and have more of a full-time job, it's easier to have a little bit more expendable income most of the time. So then that's kind of when I was 22, graduating college, all right, it's time to listen to what my dad was telling me all these years and start investing. So naturally kind of took the route of using a 401k and investing money into that. But then kind of with starting with the Amateur Investors, we kind of saw that the traditional financial markets are really broken. And it's not something that's easy to the eye or easy to see. A lot of the global economy and the U.S. economy is based around the financialization of companies and investing and buying equity and stuff. And you kind of see that they keep lowering interest rates are a big part of that. And, we're at near zero rates. And then they also, with lowering interest rates, businesses can take on more and more debt, but then with no expectation of ever paying it back. Yeah, they can claim they want to pay it back, but you kind of see that it's always, you're just passing the buck down to the future generations. And eventually they get frustrated and the money's going to run out at some point. I don't want to scare people and say, oh, the end is coming and be a naysayer, but, our grandparents and our great grandparents did very well with traditional methods. And now those traditional methods and means are breaking down based on just the returns that you're getting based on the inflation and the money that we're printing. I know that's kind of a broad macroscope of it, but
So Ben, can you talk about your perspective? So since about 2016 and how that's looked for you?
Yeah. So I guess the question that I'll pose to you is do you want to hear sort of like my narrative and how my thought process has changed about Bitcoin, or what I see for Bitcoin? How would you like me to go through this?
Probably the first part.
Okay. So when I was first introduced to Bitcoin, I do like telling this story. One of my friends mentioned Bitcoin, and to, I guess, level set my intelligence around the subject, I thought they were saying Bitcorn, like corn on the cob. So that we've come a long way where we've come from
2016 for reference.
2016. This is 2016. I had no idea what Bitcoin was. I thought my friend was saying Bitcorn. He explained it loosely, and I started to get it a little bit. Still, someone corrected me. I obviously wasn't Bitcoin for perpetuity, but it made sense to me, I think, towards 2017. And the way that I like sort of contextualize what Bitcoin is it seems inevitable, right? Like looking at, and I like to give this example, I think about like a Star Wars or video games where you have this like galactic currency or credits. And when you think about the money that you have, I don't have a safe in my house. I don't have enough money that would warrant a safe. But like when you have a bank account, that money is already digital. And to me, it just seemed intuitive to have a common denominator, a common language in the financial markets. And to me, in 2017, I was thinking that just digitization and a global currency made sense. Not knowing much about the monetary policies, or rather the monetary features that Bitcoin enables. And I think that really started to come into play 2019, 2020 for me, when I started to better understand, one, how new truly the Federal Reserve is in centralized banking. It seems like something that has sort of been ingrained in like human civilization for all of time, and it's not. It's a new system. It's sort of a game that we're playing to prevent catastrophe. And to me, what I think about in centralization of finance is a few people control the rules. People talk about taxing the rich, the 1% control this, but not enough people focus on, who's controlling the money printer. And when it comes into money printing, or whether it's buying bonds or UBI, what have you, the money injection has a point. And it has a point of injection. So if you realize kind of what's going on with the money printer, and trickle down economics doesn't work, having a centralized authority that can sort of just like change the measurement for all financial transactions. I think a good analogy is, if you're building a house and you're using a rubber band as a ruler, you never know if you're going to build the right house, and you're not going to. So that's really where Bitcoin came into play, is leveling the ground for truly sound financial transactions to occur in a global economy. And I think we're manipulating that in the Fed, and also just by having such friction in transaction from foreign currencies.
Did Bitcoin force you to learn about money, or was it the other way around, or either one of you guys could take this? Because I find it interesting, just talking to people. When you first find Bitcoin, again, if it's that speculative stage, it's kind of stage one, and then you start learning it as a money. And still, when I tell people, so I don't know what your all's thoughts on that.
Yeah, so I guess I'll take that first, and then so like I said, normally you always hear about Bitcoin as 3 touches. Sorry, the phone's going off here.
Oh, no worries.
But you always hear about like Bitcoin in 3 touches. Like, so I remember in like, when was it, 2012 or 2013, the pizza example, the guy using 10,000 Bitcoins to buy pizza. And I just kind of was like, oh, what's this? Whatever. I don't get it. It's internet money, whatever. 2017, I had a friend or an acquaintance in college that was telling me, oh, buy Bitcoin, it's going to the moon. I'm like, this person's crazy. They've never bought anything in their life. And they didn't even know why to buy it. They just kind of thought it was a get rich quick scheme. And in hindsight, they actually sold after it crashed. So they're telling me it's going to the moon. They bought it and it crashed. I was like, this person's crazy. They're right. It's a tulip mania. I really thought it was. 2020, I think, changed a lot of people's lives in many different ways. And I think really in 2020, that's when I started to learn about money. Started reading a lot more books. I used to love reading, and then, life gets in the way. I stopped reading. So now I read half hour every night, and I try and hold myself to that. Maybe I'm a little more gracious on the weekends, but every night before going to bed, I read half hour a night. So I started reading Rich Dad, Poor Dad, Money Master the Game, all that. And then finally came on the Bitcoin Standard and actually found Bitcoin Twitter. And then that just kind of led me down the rabbit hole of like finding out what money is. And basically, we don't have money in this day and age. We haven't really had money even in since 1971. And even before that, they were kind of changing the money multiplier on gold. I was really looking at it as like we've always had debt. And the United States has had debt, and the way we've been able to to leverage that or take advantage of that is we've been able to sell the means of our production at the opportunity of paying it back at a later date. And people have kind of bought into this narrative, and it's worked for a long time, but we're running out of rope here basically.
Yeah, Ben, I'm gonna get your thoughts on this. So, like, some of the numbers are just so staggering. But again, if you don't know the numbers, you don't know. It's one of those. It's just one of those simple things, right? So, there's $20 trillion in negative yielding debt in the world, and that I cannot get over that number. It's very hard for my mind to wrap around it and like actually understand that. And the fact that Bitcoin's market cap is only like 700 billion.
Yeah,
there's 20 trillion in negative yielding debt worldwide, like that. And there's many more layers as to why the fiat financial system's broken. But I think that's one that always sticks out to me. So Ben, I know your thoughts, or you want to add to that?
Yeah, well, both. I guess there's 2 points. One, Bitcoin was what drove me to understand and try to understand money. It's one of those things that you use the word for the definition, right? Where you think you understand what money is, but it's kind of like explained to color to someone who's never seen. And it's a difficult term until you start to break down fundamentally what it is, what it's meant to serve. And again, going back to like sort of the Federal Reserve and thinking that, a lot of people think the dollar is backed by gold. Like you were saying, Chris, we haven't had sound money since 1971 or something close to it. Fiat means by decree. So we need to trust a central authority. Conveniently, we live in the US, so that's the authority that governs that. But that's a big vulnerability, in my opinion. And to your point about just like what $20 trillion of negative yielding debt, there's no surprise there at the end of the day, right? Like we're constantly forcing that number down to keep financial markets afloat. And the only way to do that is to continue to race to debase to the bottom. And we have the keystrokes to continue to do that. And like, I think this is a really prudent title for this episode, that Bitcoin will take over financial markets, because I think a lot of people, like you were saying, Chris, you started the 401k, maybe some folks have a pension. Those are not activist investors. Those are people who are trusting their money to the traditional financial systems and a financial advisor, who might just be an AI, honestly, at a big investment firm like a Vanguard or Fidelity. What Bitcoin, I think, enables is it forces financial responsibility at all levels, because when you're dealing with a scarce asset, I think that's the biggest thing that's really been driven home for me on all the monetary properties of Bitcoin as money, is the scarcity, where you can't just change the rules mid-game. You have to work with resource allocation. I think Bitcoin takes financial markets from monetary tools and fiscal tools to truly resource allocation. And I think that's where it comes down to, is it forces, I know a lot of people will bash capitalism, but at the end of the day, like a capitalistic structure, and I use this phrase, assigning your money to a thing, whether it's through purchase, through investment, you are voting with your money towards the success of that thing or to the utility of that thing. And with the Federal Reserve, they have infinite votes. And it is important to express that right to vote. And I think it comes down to the monetary system. The Fed is voting and moving markets, and the people don't have that voting power. And I think Bitcoin puts the votes back into people, because there's only 21 million, likely less given how people lose their passwords. But I think the scarcity is that key driver for financial responsibility across all markets. And that's hugely important to me. So that $20 trillion of negative debt, it's nonsense. It really is. And it's upsetting.
Yeah.
And go ahead, Chris.
Yeah, I was going to piggyback off that. I know Lynn Alden, she's kind of well-respected, not even just investor, but just in the Bitcoin community as well. She had a tweet like maybe a week ago that was saying, if you bought on this date, or if you bought the 5-year treasury bond, like end of May, and she was saying like June 1st, you would have already lost your money based on inflation alone. I think it was yielding like 0.35% over a 5-year period. So a 5-year treasury bond. If the Fed is targeting 2% inflation, you had a loss of 0.25% of your money. So, and that's not even just inflation alone. Like that's not even including the lost value of your purchasing power. That was just like, they're targeting 2% inflation. You lost money. You gave them $100 and you'll give me 90 back, or whatever the math works out to be. I think it's just crazy.
Yeah, so a couple things I wanted. Jim jumped on Twitter and said, if Chris and Ben are amateur investors, 99% of Americans need a new word to describe their knowledge.
We love Jim. Jim was on one of our episodes. Definitely a good listen. I forget what number it is. Thank you, Jim.
We still are amateurs.
Well, I love having these conversations, because every single time I have them, I learn something. right? Because it's the way people say things. Like language is important, and the way you say things are important. And like I just feel I could have these conversations over and over again, but people have their own way of explaining it. So I think that's why these conversations are so important. And obviously we're not, Rich Dad Poor Dad. I think I read it 2014, 15. And once I read it once, I didn't quite get it. Like, and I had to keep reading it. But it takes you out of the system. It helps you to think about, what if there's another system, right? Yeah. And I think that's the push and pull right now between like the fiat system and Bitcoin, right? And I always think about that. So like Paul Tudor Jones, for example, like on Monday, comes out now. So it's funny because he's going through his own progression. I love it because last year he was like, maybe a couple percent, 1 or 2%. And by the way, Paul Tudor Jones is one of the most prolific investors ever. So he was like 1 or 2% last year as a hedge or whatever. And then now he says, 5% in Bitcoin, 5% in cash. Like, so he's giving an actual, 5% to it. And it's just going to increase over time. That's how it works from an individual basis or a corporate balance sheet basis. And that's how the progression is. So it's cool to see him go through that. And like Ray Dalio coming out a couple weeks ago, that was huge from the macro investor side. So I mean, any takeaways from that, or anybody in chat that want to add to that too?
Yeah, I think it's pretty exciting. Like at the end of the day, we're seeing truly a progression of not only the utility of Bitcoin, where it goes from a speculative asset or just a speculative bet to, I guess, a store of value to then a unit of account. I think that narrative also scales to people's mindsets. And I think I was really excited to see a Ray Dalio and a Paul Tudor Jones. I even tweeted about the Paul Tudor Jones thing. It's like, okay, well, it was 1% before, now it's 5% on mathematical certainty that he was saying. I was like, okay, well, if you don't know what to do with 80% of your investment, maybe bring that up to 10 and feel a little bit better about your mathematical certainty that you're defining it. So I'm excited to see that the narrative, one, I think it's bringing validation to the space, right? Like we're seeing that there's a country that is now accepting as legal tender. That's incredible. And I think it's totally not being priced into what Bitcoin can be, because I don't think people understand still what Bitcoin is. And we're seeing just like the smartest people in the room and the best investors out there that are not only just acknowledging it, that like, okay, it's not just a get rich quick thing. They're talking about like 1 Bitcoin equals 1 Bitcoin. They're understanding what it's truly designed to be, as opposed to what is the price doing today. And I think that's where people might lose themselves in the conversation. It's like, oh, well, it's too volatile. It's like, okay, well, I always like to talk about the volatility of the US dollar. Sure, it's not volatile, but it's consistently losing your buying power. Always. Every day.
It's I would like to get your take on this too.
Please.
The fiat mindset versus the Bitcoin mindset, or the Bitcoin standard. So fiat standard versus Bitcoin standard, not to take anything from safety, because safety is obviously just such an important, played a role in my life after reading the Bitcoin standard. For sure. And you're literally taking yourself off of the mindset of the fiat standard onto the Bitcoin standard. Like just that progression. I actually did want to grab a quick question, because I think this paints what we're talking about. I want to grab this real quick. But Greg says, in what order do you see the traditional markets getting swallowed by Bitcoin? What impact do you see this having on real estate?
Yeah. Do you want me to get started on that, I guess?
Yeah, if you want to, Chris, I can always jump in.
So I think it's going to be a progression over time. And I think, the first movers are going to obviously fare the best in the long term. I think it's very interesting with a lot of these billionaires like Ray Dalio and Paul Tudor Jones. They're kind of like giving validity to the Bitcoiners, that what they've been saying all along. And, it's like we always knew, or they knew, that they were right for the longest time. But now these billionaires coming in, at the end of the day, if fiat currency were to die, the billionaires are going to be fine in this world, barring there's no like civil upright that they like people start killing them, which I hope that does not happen. But, in terms of monetary policy, they have enough money that they can buy Bitcoin or real estate or whatever the precious asset is. So it brings validity. I just hope it brings people that are like, okay, this rich person, this billionaire is saying to buy it or allocate money. I hope that they can take advantage of it. In terms of how it swallows the traditional markets, I think it's going to, like, the tech companies are going to either try and do their own thing, like we saw with Facebook, and then not fail or stop that, but then eventually buy Bitcoin when they come to the realization. I guess in terms of impact on real estate, I think real estate transactions become less of 30-year mortgages and more of like promises to like denominate in Bitcoin, or either you give them partial Bitcoin and then you have to give them Bitcoin payments in order to buy it over time. Or maybe I know a lot of people talk about stable coins that, I'm going to take out this loan in fiat, like central bank digital currency, and then pay back over time in Bitcoin equivalent or whatever that may be. Or if I don't pay back the USD loan equivalent, you get my Bitcoin as collateral. So I think it's slow and steady. I think the tech companies will be the first movers that a lot of people see and say, with like Tesla, for example, and Facebook and Amazon and Apple that have money just rotting on their balance sheets, basically.
Yeah, the way that I see it, I don't think that we're going to see this kind of, and this is my opinion. I don't really have a lot of like data to back this, but I don't foresee a cataclysmic uproar of financial markets. The way that I see it, honestly, is I just think that the denominator is going to change in how we price things, how we sort of like project out cash flows. It'll be denominated in Bitcoin. And like, I think a lot of things are going to look fairly similar. What I think is going to change is how cycles work in the business, like financial markets. I think we could see pretty drastic recessions based upon just the amount of inflationary pressures have existed with the amount of money printing. I think there will be some near-term pain, but I think that's really what it comes down to in capitalism is things fail and then out of the ashes, something comes out. So I think that we've seen it with Tesla. They bought $1.5 billion, whatever. I forget about Elon Musk's tweets. It doesn't matter, honestly. I think we're just going to see a tiptoe effect where Bitcoin is doing things in parallel. I don't see it as a stepwise function. Like we're already seeing, like people are like, oh, it's going to overtake gold. It truly, it doesn't matter. There's never going to be a checkpoint where someone waves the flag. Oh, it beat gold. Gold is still going to be used in electronics. People still like gold because they think it looks pretty. That doesn't matter. People are investing their money in Bitcoin as a store of value because that's sort of how they're buying Bitcoin. I think Bitcoin will just kind of like slowly and symbiotically exist in financial markets as it already is. Like people are using it as a store of value. People are investing it and not selling it. So that's like you're storing gold. People are getting yield in Bitcoin through lending rate environments. So there you go for the fixed income markets. And people are also trading Bitcoin. So I think a lot of these things are going to happen in parallel when there's like an overturn or a full shift. I don't know what that looks like, honestly, but I think it will come in steps in parallel, not this kind of like checkpoint where it's so obvious. I think it's just going to creep its way and entrench itself in financial markets. And that's how I see it. Real estate, I think it'll just be transaction where you can buy a house in Bitcoin. And if it's the cash, then Bitcoin is that number. I'm not really too sure about the real estate side.
Yeah, I have to quote, Parker Lewis, slowly then suddenly.
Yeah.
In his great series that he has out on that. Make sure you look at Parker Lewis and some of the articles he's done. And I agree with that. And back to real estate. I mean, what's interesting about Bitcoin, if you just buy, if Bitcoin is your unit of account and you buy it and you don't sell it, you're not trading it, none of that stuff, right? There's no property tax.
Yeah.
There's property tax on real estate. It's like little stuff like that. You're like, oh, it's starting to make more sense, right? And you truly, I think one of the things that's overlooked with Bitcoin is you put your monetary value or monetary energy into it. And then when you start interacting with it, I think that's when it really changes for people and people that I know or myself, like when you're actually starting to use some of the tools built on top of it, learning about Lightning, layer 2, and I went to the Bitcoin conference in Miami, and these presentations on layer 3 and layer 4 and some of this stuff. I mean, you're literally building an entire, the new internet built on top of Bitcoin. Mm-hmm. And it's just mine. And I'm not a developer. so my mind's more like a macro mind for myself. You kind of have your lanes of what you're good at, what you're not. I am not a developer, but I can see the picture of how this is kind of playing out, especially if you follow it closely enough. Because you mentioned that Bitcoin, obviously we're still in the store of value narrative stage, and then portfolio allocation and what we mentioned before, but then the ability to use it in very unique ways with Lightning Network and what's happening with layer 3. And then I know several companies, like I got a shout out to Impervious AI and what they're kind of building for layer 3, and then kind of creating this like that new privacy layer where you're interacting with individuals one-to-one versus an intermediary. Like you'll be able to stream sats or stream Bitcoin to content creators, instead of it going to an intermediary and then like a YouTube or a Twitch taking half of that value if you send a donation and things like that. And it's already happening. It's very early. But I think that's what's most exciting. Obviously to have something that has absolute scarcity, there's only 21 million and roughly 3 to 4 million is probably lost. So it's probably 17 million. Right. And then we know for a fact, just like Paul Tudor Jones says, math is math.
Yeah.
And he said he trusts math, and I trust math. I trust math. I trust the protocol. It's not going to change. Right. And it's absolute scarcity. There's no other asset in the world that's absolutely scarce. Not even gold. Gold has an inflation rate of right around 2% a year, right? And Bitcoin doesn't have that, and it's going to get more scarce over time. So that's what makes me excited. That's from a store value standpoint, but from a transactional standpoint, and being able to transact with other people, not even one-to-one, but you're able to like stream sats with multiple people and groups of people, and then create this circular economy.
Yeah. So Bitcoin is top of mind. So this is the first time this has ever happened, and I don't know if it's because we were coming on the podcast today, but I literally had a dream about transacting with the Lightning Network, and that's like the nerdiest thing that I've said today so far. I was like,
early.
It's still early.
It's still early, but it was like almost like I was in a Tron type setting, sending money between the Lightning Network, and it was actually a nice visualization. So maybe I'll draw something. But I think what you talked about, like in Chris Alaimo, you've even said this, that like Bitcoin is like the foundation of the internet. I think this is, and people ask me about like why Bitcoin and not other like altcoins. Just even the origination story of Bitcoin, where it is founded on an anonymous development team, you're not finding that anywhere else. And when you've developed an asset that's designed fully decentralized from day zero, I think that's incredible. You don't know who the CEO, you don't know who founded it. It's simply a community-driven platform that is secured by its community. There's no other altcoin that can do that. And even if they want to, Bitcoin is designed digital scarcity like no other. And as soon as you try to introduce another one, you've just made it less scarce. What's the purpose of that? You've overridden like the value prop of Bitcoin. So don't get distracted with other altcoins. If you're trying to truly invest in a monetary future, Bitcoin is that. It's the foundation of sort of the financial house to build all their applications. Like the internet, I mean, look what we've done. We now have mobile apps on our phone. I can't remember the last time I had to dial in a payphone or pull an extension cord through the other room to have a private call. These things, like you said, slowly then suddenly, Bitcoin is moving slow. It's the opposite of like sort of the Silicon Valley mindset of move fast and break things and fail fast. Bitcoin is like, let's do it right once and then build the future from the most stable foundation we possibly can. So I'm really excited about what these layers can offer, because every sort of value prop that these altcoins try to come into the space with a quirky product, Bitcoin's just going to do it better, eat their lunch, and then continue to do it in a way that's both secure, anonymous, and just like sound.
Yeah, definitely. I see the race for Bitcoin accumulation by this is just me personally. So sure. I just see it as a race, and just based on number and math, by 2035 is kind of the race. Like when we get to by 2035, I think I looked at it was like May of 2035, 99% of the Bitcoin supply will be mined. And then it's going to take the remaining, what is it? It was like
2140.
Yeah, 2140. So that's 106 years to mine the last Bitcoin. It's really the miner's incentive is going to have to flip that transacting across it is going to be their incentive for mining it. So the price is going to have to compensate for that. I know, Plan B has a lot of models, and people have issues with the model because it doesn't have a limit, basically, based on how much money they can print, which is, I guess, true. So he's right to some extent what the price can do, but your purchasing power will be limited based on what it is.
Yeah, and then another term I'm still wrapping my head around is like the accelerating issuance and depreciation. Depreciation, because in the next 10 years, roughly, and these are rough numbers, but the fiat system could have right around $1.2 quadrillion in it.
That's insane.
1.2 quadrillion, 1.3 quadrillion. My mind, it can't wrap around that. Right. Because and it's like a genie out of the bottle. I was talking about this yesterday on a Twitter Spaces, but it's like the genie out of the bottle, or the vapor. You can't take vapor and put it back. Yeah. So like the money that's being printed is like that. And once you hit a certain threshold, it's that accelerating issuance and depreciation. It just keeps being depreciated over time. And it's great this last year that it's talked about a lot more. I know people around in my life are starting to ask about inflation, because it's become more of a mainstream conversation, and because of what happened, when they go on 60 Minutes and they say we have unlimited power,
Yeah. Oh,
as
that
much
clip
as we
was
want.
hilarious.
like the
You know, like
Emperor
the 60
Star
minutes
Wars.
clip. So I know that was a mouthful, but I just kind of want to throw it out there and just kind of get maybe people in chat's thoughts too.
Yeah, it's really interesting too. I think something that I haven't really ever heard talked about, but it's something that I've been investigating. And when I look at it, people talk about the velocity of money continuing to fall. Like basically, as the rich get richer, they don't need 20 loaves of bread or whatever it may. Like they only need how many cars, how many houses, how many things. So like the velocity of money keeps slowing down as you put more into circulation. So Bitcoin helps solve that. That if people are holding on to it and not using it, but then other people are transacting on it, just like, let's just say like El Salvador, them putting it as legal tender, which it's going to be really interesting to see in the next 90 days once the law officially goes into effect and where all everyone in the country has to accept it as legal tender, how other states are going to operate with El Salvador. I think they're still going to dollarize El Salvador, but it makes it very interesting if El Salvador has Bitcoin that they want to swap into USD and stuff. Is there going to be a capital gains tax on the El Salvadorians to go into dollars, or is it just the normal Forex swap or the foreign exchange currency? But where was I going with that? Oh yeah, so basically right now the velocity of money, as you look at it over time, it's just going a constant line down. I guess it's hard to do it reverse with the camera, but it's basically going, the velocity of money keeps dropping, and when that occurs, they need to basically send UBI or give people stimulus money so that way they spend the money, like the normal people, the poor and middle class, to just spend money to get it back into the economy. If you're a big business or a billionaire, you don't need to spend money in order to reap the riches or the benefits of your riches. So I think a Bitcoin standard really helps keep the velocity of money up. That helps businesses, that helps the poor and middle class, that helps small businesses, where traditionally those are the ones that are beaten down by recessions and money printing and all these different things that the Federal Reserve and central banks do to basically hurt money and hurt those people.
Yeah, and Chris, if you want to jump in,
Yeah.
Other Chris,
Sure.
if you want to interrupt me or talk. So
Cool.
that number, the quadrillion, is staggering, and I feel like I've maybe played video games where I've gotten up to that high number, but it's slow. It like crashes my computer. So it's ridiculous to see that. I think even so, that number doesn't really surprise me when we have sort of a central authority across the world, in the IMF, where we can continually debase our currency to just, like I said, keep financial markets in check, whatever that means. I think what's a bigger consequence of that, and Chris, you're talking about the velocity of money, but I think the issue is that we're measuring the wrong things for the wrong reasons. Like fiat currency, I think, enables consumeristic behavior and a false reality of just like perpetual growth. Like we are a planet of finite resources, of finite space, and our lives are of finite time. Like I think the finality of everything that we know is just innate to, I think, existing, to be quite frank. And fiat overrides this like law of conservation of matter. And I think like the law of conservation of matter, I think, even propagates into financial markets, that scarcity is mandatory. Otherwise, you are playing fantasy world where you continue to create things out of the ether, making companies grow at double-digit clips, even if they're unprofitable. Like the unprofitable index, I think for the U.S. is like outpace the S&P 500. It's ridiculous. It truly is that we're pushing for growth without productivity, and productivity without benefit. So I think what Bitcoin will do, like I said, enabling scarcity and having folks be truly intentional with what they're doing will, I think, raise the bar of excellence where quality becomes prioritized over quantity. And it won't be so important to get just like cash flows off into shareholders or just to grow a stock price when they haven't made money in 10 years. I think that's really where the number of quadrillion is. Like we're just forcing things to grow that can't and have no reason to grow. It's like trying to grow a sunflower in midair, and it's just we haven't planted the proper soil.
And so a transition too is that in the fiat system, because of this money printing, as we talked about, right, it forces you out on the risk curve.
Yes.
Mm-hmm.
So this is really important. When I understood this, it made a lot of sense. So it forces you out on the risk curve. So it's crazy. You go to work and you get monetary value from that work that you do, but that's not enough because it's not sound money. So then you have to take that unsound money in fiat and then do something with it to keep up with the inflation.
Mhm.
And I think
And
most people don't know that. And that's what, we talk about personal finance. It's interesting. It's like, you should know personal finance. And it's like, I think sometimes you ask why, like, why do I need to, because I got to keep up with inflation. I got to keep up with the hurdle rate that's going to debase my money if I just put it under my mattress.
yeah,
I find that really fascinating. And that's a fiat standard. In a Bitcoin standard, it flips. So like
yeah,
this completely flipped. You have actually sound money. And if any, and here's the thing, one thing I'll add too is, if you've held Bitcoin between at least one cycle, at least one 4-year cycle, or maybe two 4-year cycles, and you've it's been your unit of account for 8 years, right? You've held sound money for a period of time longer than a cycle, because there's halvings every 4 years. I don't want to get into all that right now.
yep,
But when you hold sound money, it holds your value.
yeah,
So that's something I think about a lot. So you got the fiat system that you get the money from your work, and then you have to take that value and put it to work to keep up in order to live.
yeah. And Ben and I love doing this on our side. That's why we started the business, the Amateur Investors. But exactly to your point, like some of the people that are most beaten down, that are working 2 jobs, 3 jobs, anywhere from 60 to 100 hours to 120 hours, that are making minimum wage. There was a tweet by, I forget who it was, but it basically just showed, it's funny that they show the minimum wage from 2009 has been $7.25. Obviously, depending on where you live, that can vary and your state can change it. But from 2009 to 2021, the federal minimum wage is $7.25. Yet every quarter, you got Jerome Powell or whatever, the chairman of the Fed, coming out and saying, "Oh, inflation was 2%." So it's like, so you just announced that you're okay with leaving the poor and middle class behind when it comes to inflation. Like, we're not increasing the federal minimum wage. And to your point, like, if you're working all these hours, you're busting your butt, and then they're like, well, you now have to become a finance expert or give someone else your money to invest for you, and they're not looking out for your best cause. Or if you don't know if you're being taken advantage of. It's exactly what you're saying. If you don't have a sound money, you don't have a way to store your wealth and the means of your labor for the future. And, you can get screwed in the end because of inflation, the money printing, the debasement of the currency. And ultimately, you could have worked your whole life. You could have been the hardest working person in the world. But then if you have less purchasing power than had you while you were working, you have to keep working till you die. And that's a sad reality that many Americans or many people globally are going to potentially run into.
Yeah, that's why I think understanding money is so important. At the end of the day, I think people just expect inflation, and trying to beat inflation, that's someone's full-time job to do that, right? Like, it shouldn't just be, Ben Gassaway has to go try and beat inflation and beat the markets. That's like, you go to school for that, you study for that, you go to work, and you usually don't beat the market. So to just say that every average, just every citizen has to go try and figure out how to keep up with inflation, I think is a farce. And I think it's really unfair. Like, and at the end of the day, like, money, there doesn't need to be inflation. Inflation is a bug, not a feature. But I think it was designed to be a feature, not a bug, unfortunately. Like, inflation is truly a problem. It's an issue. Like, inflation doesn't need to exist. For there to be a monetary system, you don't need to inflate it. At the end of the day, like, what scarcity, and I like that comment, scarcity equals sanity. Scarcity means that you're properly pricing, properly valuing everything, including services, work, products, companies. What the scarcity does is it forces a true valuation, as opposed to inflation, where the supply is always changing. Like, I still have not heard a good explanation for why the money must grow. For it to be a good money, why must we print it? The scarcity just makes sense, because you truly have to properly allocate things, and things are valued not in even just dollar terms and like, what is the sticker price, valuing as in like, what is its importance? What is its place in existence? Because if it's not truly providing value, it shouldn't exist. And what inflating the money and printing money enables to do is it enables unproductive, if that's even a word, unbeneficial things to exist, basically just on life support. Even if they're not productive to society, they may exist because the money is free.
Jim's got a good question.
Yeah.
Thoughts on Bitcoin as pricing mechanism while it's so volatile, and then constantly reprice goods or services? That's kind of a follow up there. So any thoughts here?
Yeah. Go ahead, Chris.
Yeah. So, I mean, it's volatile in terms of fiat. Whenever we're talking about the price mechanism being so volatile, it's what the USD price is from day to day. But if you were to price it in Bitcoin, exactly to Ben's point, or Paul Tudor Jones, 1 BTC equals 1 BTC. So nothing's changed with buying goods and services. If you put it as a unit account, obviously if you're comparing it to the US dollar, or what it's trading relative to what the US dollar can buy you, yes, it's very volatile. But if you're comparing it to what BTC is or Bitcoin is, it's no volatility at all if you're holding it or buying it or whatever it may be.
Yeah, I think the math on it, and honestly, I want to have an opinion on this, but it is complicated, and I don't think I'm intelligent enough to be able to tell you confidently like what a repricing of Bitcoin in today's dollar terms, just since like merchants accept fiat primarily. I think it's difficult because my counter to that would be like, what can 1 Bitcoin buy? But it's always kind of being measured against the US dollar. So we have a scarce supply of Bitcoin. It's fixed. And I think you can reprice, and I think it will come to a repricing of Bitcoin because you have this common denominator around the world that's finally possible, that you don't have to worry about the friction of foreign transactions. This is like a stat I like to give is every day there's $6.6 trillion of transaction volume in the foreign exchange markets. That is strictly inefficiencies. That's the cost of inefficiency of simply living somewhere else. That means that someone is losing money simply by participating in global commerce. And I think that's ridiculous. So Bitcoin and the repricing is inevitable. But I think it's a difficult thing to do. I don't know what your thoughts are, Chris.
Yeah,
on that.
I wanted to kind of follow up with this too, because I think we skipped over a little bit on like the repricing of other assets when it comes to Bitcoin, as Bitcoin kind of absorbs the value from those other assets. How do you guys see that? I mean, I'll kind of give you my take quickly, but
sure.
I think just over time, I think the markets, and I don't know when this is going to happen. No one knows. I mean, we're all on our seat for 2:00 today when Jerome gets on the mic. We want to know what he wants to say, right? But just we have no idea how it's going to happen, but the market will get repriced in some way, right? Because we talk about the risk curve. When you go on the risk curve, people are using store of value for equities, for real estate. And that's why he can't keep going up. It can't keep going up. Well, what if we're experiencing maybe the early stages of hyperinflation? I don't know. No one can actually definitively say if we are or not, but it's those dollars that are trying to find a place, trying to find a home to be stored in a better way than just the fiat, just staying in fiat, right? Mm-hmm. But those are still fiat denominated assets.
Yes.
Which is I think that's pretty important to understand. So there's the fiat denominated risk of those assets being kind of in that area, right? And then when we do have, I think that we will get a significant repricing at some point. I don't know when that's going to be, right? And I think that's when we're going to have significant capital flows into Bitcoin. Not that there hasn't already been. It's a $700 billion asset, but actually that's not a whole lot compared to the entire fiat system at 400 trillion or whatever it is right now. So that's like my very broad picture of how I think it plays out, and it goes back to the slowly then suddenly. And it's also the information asymmetry. So I talk about this a lot. It's just, it comes down to, do what people understand what it is? Do corporations understand what it is? Not every corporation's MicroStrategy. Not every corporation put their whole balance sheet in and then did 3 tranches of debt against it to buy more, and then issued $1 billion in stock this week. So not everyone's at that point. It's in my opinion that eventually people will get to that point, and corporations will get to that point, but it's a progressive step.
I think so too. And I think the way that I see it, like you said, like I think there will be quite a bit of movement. I see it almost like a strong inertia on a seesaw where you move up, where, a lot of outflows out of traditional equity markets, out of the bond market. I think you will see sort of like a slowly then suddenly, like you said, like once something clicks, it will happen. And that's why we see a lot of volatility into Bitcoin is some people are getting it, some people are not. We're on the precipice of a major change. But once those cash flows go to Bitcoin, I think they're just going to be reallocated again. And that Bitcoin, those assets will go from a fiat denominated assets to Bitcoin denominated assets. And what becomes more important? Cash flows, healthy balance sheets, managing risk. And I think people's risk tolerance will go lower because you have an asset that has 0% inflation into perpetuity. And so that's money that is the lowest risk. Money is finally the lowest risk asset you can have. You're now going out on the risk curve readily, and stocks are no longer that safe haven because cash flows are so important and you have a scarce asset to deal with.
And one thing to add real quick is that, from most will know this as well. But if you want to throw out some, traditional financial, I love all the sorry, I just laugh because all the money managers that they do not like Bitcoin.
Yeah.
Do you know why? It's a threat to their business.
Exactly.
It's a threat to their AUM. They don't like it, right? If your business is a fiat denominated business that's dependent upon that, right? You don't like it. So, I get a lot of pushback on, especially on LinkedIn because it's a threat to the business. It's a threat to your AUM. If you have because here's why. Here's an asset. Bitcoin is not only is it the best performing asset. We hear that a lot, but risk adjusted, it's the best performing asset. Mm-hmm. Now that's a very important statement, especially because it's about risk. It's all about the risk that you take for the upside that you get. And Bitcoin's been number one any 5-year period. It's number one and it's called the Sharpe ratio. Yep. For all the fiat shillers out there. All right. You know what the Sharpe ratio is, you fiat people, you fiat money managers, you know what it is. It's number one. And when I say that, they usually shuts their argument down. They're like, well, I can't really say a whole lot, right? Because the risk you're taking based on the upside, it's a mathematical equation, right? Yep. And the average growth rate of Bitcoin is 200% a year. Now, obviously you can't do that forever, but cut it in a fourth. What if it's 50% a year? Yeah. What other assets doing that year over year? Right. With the Sharpe ratio, with the risk adjusted, capability of it.
Yeah. And that's a great point. A lot of them are arguing against it. I think, I don't know, but I think a lot of them may be calling it out in person and saying, no, this is the way you got to go, while buying it on the side for personal use. That would be, I think, very disingenuous and non-fiduciary type way. I hope that's not the case. Not saying that I hope that they get hurt, that, they keep pushing the narrative till the train falls off the tracks. But so I hope they wake up for it, for not only them, but for the people that they serve and their customers. But yeah, it's a really good point. I think the way that this breaks down is exactly like you said. You're going to see the inefficiencies start flowing into it. The price is going to appreciate, and then that's going to bring other things that are inefficient as well. Right now, 18 trillion in negative yielding bonds. That's going to have to go into it. The 6.6 trillion per day of outflows going in from just Forex changing, those countries are being beaten down by that. They're going to flow into it. El Salvador is the first one. Panama, Uruguay. We're seeing a lot of the countries are trying to take their playbook and do the same thing for their country. And then after that, you start to see real estate and equity and all this. In terms of equity, right now, when we were just looking at the tech companies, a lot of them are trading at PE ratios, excluding Tesla, but like closer to 30. That means their price to earnings, they are not earning enough revenue to compensate those valuations. I know Warren Buffett always talks about he likes seeing a PE ratio of 10. The best businesses in the world are right now at 30 to 40 range. I think even Amazon's at 62 price to earnings, meaning that they need to increase their or if they were to keep their revenue production the same for the next 62 years. Yeah, their profit the same for the next 62 years, they'll finally pay you back on that dollar that you invested in it. So I just think that's absurd. And, if those are the best businesses, what are the worst businesses doing? So that's the crazy thing.
Yeah, my argument is to throw it in there too. I think Bitcoin is value investing.
It is.
That's my thought. That's how I've looked at it. It's been a good 2 years for me is right around that. Like I've seen Bitcoin as like a value investment, which is the total opposite of the fiat narrative. It's like the Warren most risky asset ever and all this stuff. Exactly. I think it's the opposite. I think it's a value investment.
Yeah, I think so too, right? Because our thesis is that it will overtake traditional financial markets. Okay. And value investing is you're buying underpriced, underappreciated assets. Bitcoin's one of them for sure. The amount of people that own it and the amount of corporations that don't understand it, you're getting in early. And at the end of the day, I think people get lost in the sauce about what Bitcoin is from a technology standpoint, but Paul Tudor Jones, it's math. And if you know anything about economics, it's simply supply and demand. And the supply we know. So the only thing to change is demand. And as more people get it, and we see it every single cycle, the narrative is shifting upward, that demand is only going up on a fixed supply. That's math. That's why the price go up. Number go up.
Right. And then you can verify it. You can run your own node.
Yep. And you can look, verify you can see it, you can export it to Excel.
And that's a beautiful, I think. And again, running, I know I say running node and people probably ran away that are fairly new, but don't run away, don't get scared. That's just part of your progression of going through Bitcoin, right? And that's probably one of the last steps. Now, coin joining and all that, that's probably step 5 or 6, right? And obfuscation, all that good stuff for privacy. I don't want to go down that technical route right now, but it gives you the power to own your money and be able to verify the supply of it. Good luck. I think I made a post a couple of days ago, good luck verifying the supply of the dollar, because you're not. So you actually don't even really know what your dollar's worth.
Yeah, and
Really.
they discontinued the updating. Chris actually pointed this out to me. They discontinued the Edgar chart on the M2 money
M2, yeah.
supply. I mean,
It runs through April.
If that doesn't tell you what's going on, I don't know what will. That the number doesn't basically fit on the page. So with Bitcoin, you don't have to run a node, but if you care about your money and your net worth, you have the ability to verify the whole network, and I think that's a beautiful thing.
Yeah, shout out to BTC Sessions. I think he's got phenomenal content on YouTube, running nodes and Umbrel and I mean everything you can think of when it comes to that. And he breaks it down because there's many different ways. And actually, then Citadel Dispatch, Odell and the team, they had like 8 different people on yesterday. If you go listen to Citadel Dispatch, and it really push you to actually run a node. Yeah, because then that's when you truly understand what your value is in the Bitcoin ecosystem, and you can verify every single day. And you can trust it because, again, going back to your trusting in math, and you can see it right in front of you. Yeah. And I don't have to have a central authority to tell me it's okay. Trust me. Math is right.
I'm running my own node. We're getting Ben his own node shortly, so we'll be all set up and good to go. But yeah, it's once you first run it, I set it up and I was like, well, what do I do now? And then you kind of have to learn how to use the node. It's like it's like getting the internet and then having no applications above it. And then you're like exactly the internet example. Oh, I can go to Facebook now. I can go to Amazon. Oh, I can run a business with my website. I can all the different applications are coming and they're coming quick.
And then shout out to my node because my node everyone's creating a different experience with running a node, but they're adding the application layers. So it's almost like an iPhone and you've got, your Lightning node and everything else right there. So that you can run your own LND server and everything else, but it's a click and it's very user friendly. To add the different layers and different ways to use the Bitcoin, all in kind of one interface. And it's just that. So the bigger point is the innovation is still going to happen on Bitcoin. It's just because you can. It's better. It's the best money available. Number one, and it's going to continue to be innovated on. And most people have never heard of layer 3. It's coming. It is some amazing stuff, and the obviously Taproot coming in November. It's just going to keep getting innovated. So basically, you're buying better money, and you're buying better innovation. So it's like you're investing in a startup, like the best startup in the world, along with better money at the same time. And I think Paul Tudor Jones talked about that. It's like it's a multi-layered, and if you call it an investment, but if it's unit of account, I don't know. You have your value in something that's you're combining multiple things together. And the base layer, the most important being it's best and better money.
Yeah. And even, sorry to cut you off there, Ben, I'll just add one little quick point. I know the altcoins are getting swallowed up by Bitcoin as well. Even if an altcoin innovates something that Bitcoin doesn't do, we're seeing it now with Taproot activating in November. They're taking a piece of smart contracts that Ethereum's been trying to master since its inception. And they're basically taking the best parts of it that won't break the code. And if an altcoin comes up with the next best thing, whatever it is, Bitcoin's open source that they can over time add it to it. And they just keep sucking up the value of the altcoins, whatever intuitive or ingenious thing that they invent. And if it doesn't work, Bitcoin can sit on the sidelines and say, see, we told you that wasn't a good idea. Or, they're really like the Apples of the world that I see. Like Apple never has the best phone year in and year out, but most people buy it. Like Microsoft or Google or whatever companies we've got the Apple iPhone killer. And then it's like iPhone's they're 3 generations behind in terms of technology. They're like, well, we made our camera slightly better. It's like, well, Microsoft's still we still have a better camera. And yet everyone still goes for the iPhone. And that's a great comparison that I love to say as well.
To a degree. But at the end of the day, it's better than we're talking about sound money at the DNA of Bitcoin. So it's like Apple on steroids.
Exactly.
And I think it's a beautiful thing. I think the open source aspect of it is what I'm really excited about as well. Just a community driven platform for sound money to exist. I think open source is a rarity when you live in a society of just intellectual property rights and what have you. This is an open source. You can go look at the white paper. There's no secrets. That's why it's so easy to copy it and try to make the next Bitcoin. But Bitcoin's already been invented. Go do something else. Go do a humanitarian effort. Go be productive instead of wasting people's time and making people lose money. Bitcoin's already been invented. And that's why people are realizing, waking up, let's develop on the most sound money that we have. And let's do it right once. That's the goal. Measure twice, cut once.
In cryptography, people have been working on cryptography for 50 years, since the 70s. And most people don't know that. So they think Bitcoin was this random idea that randomly popped up. But you got to understand it actually was a progression from the 70s. Mm-hmm. But they always were in roadblocks when it came to like eCash and Hashcash and things like that.
Yep.
So I think it was all those, put together, and then it was just this culmination of digital scarcity. And you can find digital scarcity one time. That's already been, and you mentioned that earlier, and it's already happened. It's already happened. Good luck copying digital scarcity again, because you can't.
Yeah, and they solved the Byzantine generals problem. You can have a trustless network that just like works harmoniously, and that's like Hashcash did exist. You're right. SHA-256 has existed. But Satoshi just solved the problem, a mathematical problem that hadn't been solved before. And you only need to do that once. You only need to prove the theory of relativity, or you only need to prove gravity once. You don't need to reinvent gravity. Oh, it's gravity 2.0. What do you mean? Unless something is fundamentally overridden. It doesn't really matter. All you're trying to do is like spell gravity differently. But if gravity is fundamentally the same, you haven't done anything.
It'd have to be 10 times better in order to even get some of the share of Bitcoin to go over into that, basically, in the long run.
Okay, we'll wrap up in a couple minutes. Patrick had a question on LinkedIn. Do you believe employers will ever pay in Bitcoin?
Yeah, I think it's a matter of time. I won't give the timetable, but there's already companies that do. I'm pretty sure a lot of the Bitcoin only companies do pay their employees. I'm sure you can allocate whatever you want in only Bitcoin and fiat or whatever mix you want, but there's already companies that do it now. I think that's going to be the long-term goal, but yeah.
There's been companies doing it for years. Sorry, not to interrupt you.
No worries. The answer is yes. I think it starts with like you have an option to allocate. I think that's probably the inevitable path. It's like, how do you want to sort of allocate this? Sort of how you have like allocations to your 401k. It's like, do you want to be paid in Bitcoin, half and half? Because while you still have like fiat denominated debt and what have you, it might make sense to do a split allocation, but like you can kind of create your own direct deposit just by like dollar cost averaging in an exchange. And that's kind of what I do. It's almost like I'm paid in Bitcoin because it's as soon as I get paid, it's going into Swan. So I'll chill Swan there for a second.
Yeah. Auto DCA. Yep. Like it's very simple. Yeah. You can kind of create your own, flow of doing that. Yeah. So just a couple things. So could you guys talk a little bit about your podcast? Can I give you a little window here to talk about that? I listened to your most recent episode before we jumped on.
Yeah. Ben, you want to start? I'll just add in anything.
Sure, yeah. So, Chris, first of all, thank you for having us on. This has been a blast, and you really run a tight ship here. So I'm really impressed, and this was a lot of fun. So Chris and I, Alaimo and I, we run the Amateur Investors podcast. At the end of the day, like our title is the Amateur Investors. It's a tongue in cheek that, we're trying to just like learn in public. And that's been really the goal of this podcast is, we don't really have like a strict like curriculum about what we cover. We started sort of with the value investing track. We still cover things. We do valuations. We just had an episode that came out that valued Etsy, looking at sort of their acquisition of Depop. So we're trying to learn in real time. And I think financial literacy is so important. And I think it comes down to like, what is important to you? And I think being financially literate enables you to allocate your time and resources properly. And then like it puts the independence back to you. And that's something that's really important to Chris and I, is just to teach things that have been pretty exclusive. And I think it's been, the elite have known how to move the money. They run it on Wall Street. And what Chris and I are trying to do is just like not have a pretentious view of markets. And like, if people have questions, we want to learn it, and we want to learn it with our community. So that's been the goal of the podcast.
Yeah. Our podcast comes out every Wednesday. You can also find us on Twitter, LinkedIn, Instagram. We do have a TikTok. I need to make more videos on TikTok for sure for the younger groups. But Chris, thanks for having us. I echo Ben's sentiment. Thank you for having us. We've had a pleasure being here. So if you guys have any questions, you could shoot us a question on any of our social media platforms or on our website. We have a contact us page as well.
Yeah, theamateurinvestors.squarespace.com. But if you just look up The Amateur Investors, you'll find us.
So if you follow me at the Level Up EXP on Twitter, what I'm doing is I do threads under the episode. So we're streaming to 4 platforms, and one of them is on my Twitter account. So we'll make a thread of this, and just kind of like what we talked about a little bit. I did that once. It was really cool. So maybe us 3 can go back and forth on the thread. On that thread, I'll make sure to put the links to the podcast and everything else for you guys to find resources. So that'll be on Twitter, but also on YouTube and on the podcast under the show notes. Real quick, favorite resource, maybe like your favorite book or favorite resource when it comes to either personal finance or Bitcoin or both. Like, is there something that is like a go-to? Let's just focus on Bitcoin, like the book or the resource that really helped you. And I know it's a progression, but is there one that really stands out to you, Chris?
Yeah, I think Money Master the Game by Tony Robbins. That's probably my all-time favorite book. Not that it's outdated, but I know it's been updated in the last 5 years because of the macro environment. And I think Bitcoin needs to be included in it, which it isn't, but it is now.
Yeah, for me on the Bitcoin side for book, obviously, I think you have to read the Bitcoin Standard. I think it's a really nice chronology of just like how money has played a role in society. And I would say that that's the overweight emphasis of that book is just like understanding the history of money. What is money? I think defining that gives you a firm platform in learning, like, why am I even looking at Bitcoin? Why is Bitcoin different? So I would say go to Bitcoin, the Bitcoin Standard. And like, I also really, really enjoy We Study Billionaires, like on the Investors podcast. Like anything that Preston says, I listen, honestly. I really started a lot of my financial journey with the Investors podcast. So that was really helpful just to like break the ice and find a way to start learning. And they brought up concepts. They didn't pitch things. I think it was a really nice jumping point where they'd say a term I didn't know and I'd go learn. So that's where I'd go for podcast for just general finance.
And I love how Preston bridges traditional markets and Bitcoin.
Yes.
And in fact, like he does like BTC number 8 or number 10 for the episode. So going in, it's like a Bitcoin episode. And then on the other side, it's We Study Billionaires more on like the traditional side. So it's really cool how they've done that.
Yeah, I agree.
Especially 6 months. So yeah, Dominique, we'll on LinkedIn, ask him about the links. We'll put the link. I'll put the links everywhere. So whether you're on LinkedIn or whatever, it'll be near the top. Hopefully we'll be able to pin those, but especially on Twitter, can we make sure to jump into thread? We'd like to get a conversation. I want to get a conversation on the threads of the actual stream on Twitter. It'd be really cool to kind of just go back and forth on that. So
definitely.
But yeah, appreciate you guys. Thanks for jumping on. This has been a great conversation. We got to do it again. So
definitely, we'll have you on our podcast.
I was just gonna say. So you got, I owe you an episode to jump over there for sure. So I appreciate you guys. It's been a really awesome conversation. We'll clip this up and we'll see you. Yeah, I'll probably see you guys on the podcast over there here pretty soon.
Yeah, we'll make it happen. Thank you so much for extending the invite. Looking forward to the next show.
Oh, I did have to ask one thing. Add one thing. I don't work for Unchained Capital. I'm just kind of chilling their shirt that I got in Miami. I really like the shirt. I was wearing the shirt this morning, and some random person like, "I love your shirt." I'm like, "Well, I should probably wear this for the podcast today." So a little swag I got from Miami, down in Miami there. So I thought that was, I'm not involved with Unchained. They're not a sponsor or anything else. I'm a happy client. So I really like them. So all right. So we'll take care. We'll see you on the next podcast.
Cool.
Thanks,
everyone.